Okay, we are live. Welcome everyone to the Prospero.Ai stock market live stream. Hope you got a nice reprieve from last week's market over the weekend and feel rejuvenated, ready to attack the market again this week. We got a little bit of a rebound in the markets this morning. We'll see if that can continue throughout the day. We've been seeing any kind of rally attempt fail recently, so we'll see how long that can go. I see Jonathan's in here already. Did anyone see the new Deadpool trailer? I did not see that, but I love those movies. Did it look good? I'm very, very curious to hear about that. Which Deadpool are we on now? Three or four? I feel like there's been a lot of those movies. As everybody's rolling into the stream, we'll begin today as always, and I'll take you through some of the topics that we are going to be discussing throughout today's stream. Obviously, there's so many macro news stories and just different things that are pulling on the market. So we're going to discuss in-depth overview, probably longer than normal, of all these different market stories happening. And George will join me. We're on pace for the worst week in the market since December of 2022. So, it's 15, 16 months ago. We're starting to really the market pullback is starting to really seem like more serious. Looks amazing. Deadpool 3, Deadpool and Wolverine. Wolverine is making a comeback too. I'm definitely going to be watching that movie when it comes out, no doubt. I love those movies. They're really good. Back to the market topics though. Um, I think what really needs to be discussed on today's stream is not inflation, but stagflation. So stagflation is when there's a period of slow economic growth, rising inflation or prices, and rising unemployment. And I think even more so than the market worrying about inflation, the market might start to be worrying about stagflation. We're beginning to enter earnings season. We've got a few already. This week, there's a lot more coming. I believe about one third of the SPY is going to report this week. So if those earnings do not deliver, we could be in for some hurt, but we'll discuss that. And if that's a big risk that we're seeing start to develop and become more serious as we get deeper and deeper into the earnings season. Something I did want to do was I wanted to share with everyone watching a link to the newsletter that we posted last night. We release a newsletter every Sunday. There was a stat shared in that newsletter that probably scared me more than anything I've ever seen shared. So we're gonna get into that and what that means and for the market, but I'll break it down more in depth when we actually cover it with George. But essentially, the stat that was shared was that this is the fourth time in the history, or at least I think since 1900, that the yield curve has been inverted for over 500 days. And the other three times it's happened were 1929, 1974, and 2008. So if you know what happened in those years, you know what that stat means. But we'll get into all of it and how likely that stat is to come into fruition again for the markets. But it doesn't mean good things. We'll just leave it there for now. Um, then we got into some more stock specific stories. We found a story about Amazon that was released last week after we recorded our second stream of the week on Wednesday. I think we discovered it Thursday, so we wanted to cover it definitely today. It was about a project called Curiosity, where Amazon would go undercover and they would operate as Big River Services International, and they would have their that Big Services business work with eBay, Walmart, Shopify, FedEx, basically anybody who touched the logistics and retail space. And they would just collect information to better their business. And, it just shows you the lengths that which Amazon was willing to go to become the best in the world. I'm not sure if that practice was legal or not. I'll ask George that. Um, but I wonder how often companies do this. And I don't know, maybe it's just the biggest companies in the world that have the resources to do a project like that, but we'll definitely discuss that. We have another comment in the chat. Are we still going down? Would it behoove me just to take my money out until things become more predictable? It's funny. It's not funny. It's it's interesting you comment that, Saul, because I was gonna question George today about, the bond yields going higher, and if investors should look to, if they're becoming more attractive over stocks at this point with all of the risks and uncertainties that we have in the stock market, and if investors should look to buy bonds for the time being. So I think that kind of goes into what you're saying. You could just collect a nice, safer yield than stocks. So we'll I'll put that question to George, and we'll definitely see. I mean, are we still going down? Well, the current net option sentiment for the SPY in Prospero is 0, and for the QQQ, it is 14. So that's not too bullish to me. I think in Prospero's viewpoint, it looks like we're still going to be downtrending as long as those numbers are, you know, near or below and in the single digits. So I would just watch those two numbers. Yeah. So the SPY hit 0 last Friday, I believe, for the first time, and not for the first time ever, but recently, and it's still there now. So um, not looking great in those signals. So definitely keep your eye on that and see if there's any kind of recovery. I think as long as the SPY is at 0, any rally we see in the market probably going to get sold off throughout the day, um, if Prospero is correct. So I mentioned how we have a lot of earnings coming this week. One of the stocks we always talk about, and of course we have to cover it, is Tesla. They have earnings tomorrow, and again today they are just one of the biggest, most beaten up stocks in the entire market. So I want to ask George. He's been super right. He's been saying avoid Tesla. Doesn't look good in the signals. There's too much going on, one way or the other. But with it having been beaten up so much, I feel like the bar for earnings is probably so low. Um, Maybe they could just, if they just meet expectations, maybe they'll be bullish. Whereas there's a bunch of other stocks, mostly the semiconductor stocks and a lot of the other big cap growth tech stocks that have a much higher bar. So I'll ask him about that and see how he feels. I know that today there was a story about uh, how Tesla is in almost like a price war with Li Auto in China. So we'll cover all of it like we always do with Tesla. It's a staple of these streams talking about them. And lastly, before we wrap up the stream today, we're going to get into Google stock and how they could possibly be planning to follow the Meta playbook. So Meta has been a favorite stock in the Prospero signals for some time now. And if you remember, they announced a dividend last year. Um, so could Google be doing or planning to be doing the same thing as they look to bolster their stock and their support and their investor base? They're going to be having about 83 billion of free cash flow in 2024, and they already have massive stock buybacks in place. But will they be adding to it and gaining that new uh, type of investor who's looking at dividends and value? Meta and Google are two stocks that they're very interesting because they trade at more attractive valuations than a lot of the other big growth stocks, but they also have growth. So um, we'll get into that throughout the stream. I see we have 70 people in here right now. If you're watching on YouTube, if you're watching on Twitter, please like, follow, share the video. George is having camera troubles, but he's going to be joining me any minute. So we'll be discussing all the topics that I just went through. But if you're a regular of the streams, um, definitely like that video. Let's get to 20 likes today. I think that'd be a great goal. We're gonna set the whole playbook for how you should invest this week. So hopefully you're going to find a lot of value out of this stream. And let me know if you're already a Prospero newsletter reader. I'm going to be looking in the YouTube and Twitter comment sections right now. Let's see. Twitter, for some reason, does not show when people comment in our streaming software. So I'm going to have to pull up Twitter right now, but I'll check it out. Yeah, just get your lead better. Yep. Do you like the newsletters lead better? What's your favorite part about them? How about you answer that? That would be interesting to hear. And I see George has joined, but it seems his camera is still uncooperative. So we'll see that. But let me check Twitter really quick to see if anybody commented on there. I just see a couple yeses in Twitter. So, all right, good to see we have some newsletter readers in here. I think these streams are really an enhancement of the newsletter because, we hit on some of the things that I try to hit on some of the things that I find most interesting from it. And then we expand it onto the individual stocks and stories. So, yeah, that's it. Let's see. Okay, so you know what? While I've been speaking and starting the stream, the QQQ has even gone negative after, let's see, how much was it up to start the day? I think it was up over 0.5%. So we've seen a pretty steady sell-off to begin today's trading. And like I said, I don't think that was too unexpected with the signals that we're seeing in Prospero. Although the QQQ net option sentiment is up to 16. Let's see if the SPY was able to get off of 0. No, it's still at 0. So doesn't seem too promising for the rest of the day in the market, but you never know. Fave part, no fluff, congruent with app and data, very consistent. Thanks, Lee Better. That's good to hear. Yeah, no fluff. I think that's correct. George seems very direct to the point, tries to give everybody exactly his view on the market. I think the main goal is just to try and make everybody's investing as prosperous as possible. Obviously Prospero. So whatever way and information, data, signals that we believe will help you the best with your trading and investing, I think those are given in the newsletter. So that's great to hear. I'm glad you enjoy it, and hopefully it's worth the price you're paying for it and helping your trading. Seems we're having technical difficulties, folks. We are 13 minutes into today's stream. If you're still here with me, ask me some questions because I'm running out of things to say, but I'm glad to have some people in here with me. So I'm happy to answer any questions that you have for me. Usually it's for George, but maybe you can ask me some questions and I'll try to give you a little background about who Steven at Prospero is. But he joined for a second, but there he goes.
My audio, but for whatever reason, this camera has decided today that it wants to be uncooperative the way it normally is.
We can hear you. Maybe for our shorts this week, it's going to have to be my handsome face and not George. I don't know.
I mean,
we'll
it
see.
should. I mean, if this doesn't work in a second, I'll just switch to my other computer where it's not as good. But thanks for everyone that's being patient and waiting with us here. I don't know. I really we like this other camera a lot more. And I just don't know why we're getting this interference. Normally this works.
Oh, there he goes. Yeah, so as you guys can tell, we're struggling with the technical situation today. Cameras being uncooperative, but you have me in the chat. Hopefully, you can just hang around in the meantime. I'm sure we'll get it figured out any minute now, and then we'll be off to the races. We'll have to cover our topics quickly today because I believe George has a hard out at some point. So, but we'll still try to cover everything that was on the docket for today. And as everyone probably knows, if you're not a first time viewer here, but if you are, we do stream Monday at 11 a.m. every week and Wednesday at 3 p.m. every week. So, two per week, remember those times, join in. If you're a follower of the Prospero newsletter, I send out an email before each live stream. So you'll be reminded that we're about to go live. But yeah, it's the same times every week, same schedule. So we're super happy to see people joining us in these streams. And, you know, if you watch these streams live, you get the information first that we then cut up into the shorts that go out on our Instagram, TikTok, Threads, some Twitter, YouTube Shorts for the rest of the week. So these live streams give all the good information. So it's great to see you guys in here. Now, I believe we're going to be joined by George on his other setup, but until then, it's just me in the chat. See how the market's doing. Yep. I think I had a moment of clarity when I began the stream and said it was going to sell off because QQQ's 0.15% down now. Has anybody gotten help from watching these streams or looking at the Prospero signals that helped them in your trading as the market's gone down the past 2 weeks? How did I get started with Prospero? So I originally had a social media brand or page channel called Foster Finance, and that was my passion when I was in college, and I was posting on there, very consistently. I was trying to start a podcast on that channel, and somehow I don't know if I reached out to him or if Prospero reached out to me, but I got connected with George, and I actually filmed an interview with him on my channel, which has now been rebranded, but it was Foster Finance at the time. It's still available on YouTube. You could go watch the first time me and George ever talked to each other. I think it was about a year ago at this time. And, we stayed connected. And then several months later, I think in May I started. So about 1 month from now, a year ago, I reached back out to George and they weren't being too active on their socials. So I said, let's combine our forces, let's work together, um, and let's make the Prospero socials, um, consistent, and I was willing to work with that. So we started together, and we started with one live stream per week, and I think four shorts per week, and now it's grown into two live streams and two shorts per day. So it's grown. It's all because of the people who watch the live streams and you know watch our shorts. That's why I always bug you guys to like the video and share the video. Because the success of this channel is hand in hand with my success at Prospero. So yeah, so that's our story. Uh, I got passionate about finance at I think a younger age than a lot of people do. I think I bought my first stocks when I was 17, and I've just always been super interested in the business world, stock market world, everything to go with it since then. And I love that I get to come on here and talk about it, and then you know keep editing for Prospero. Who this noggin? We got a comment on Twitter. Who this noggin? D. Sorry that it's just this noggin. Me, Steven. George has technical difficulties with his camera. He'll be joining up any moment though. I think he's probably going to switch setups and go to his backup. Uh, but until then, you're just stuck with this noggin. But we're gonna get into topics probably any second now. So hopefully that helps you. Do you have any questions for George when he gets here, D? I'll make sure he answers yours right away, um, so we can cover that. But yeah, that was the backstory of me and Prospero. Um, I've loved my experience here. I love doing these streams, so super happy to have joined the Prospero team. And I really love, the app that was being built before I got here and has continued to be built. It got the major UI update in November, I believe, and the new app is just so gorgeous. It looks completely like legit, and if I tell this to probably new users or people who don't know much about Prospero. I think it's natural to be skeptical about a financial app that you have no history with. But since it's a free app and there's no risk, I think it's so important to, over time, to just use the app and build trust. And you'll see that the signals really do work, and it's a great product. But George has joined us. Hello,
We
George.
had to give up on that other camera. I was just like, I was hacking away at it, and then I was just like, this is so dumb. I'm wasting all this time. So we're just gonna go. We're gonna start in the secondary setup today.
No problem. Uh, so I'm sure the chat has heard enough of me speaking, so I'll turn it over to you pretty quickly. But um, you know, seems like the market it popped a little bit at open, but the signals are still really low in Prospero, and it's kind of stalling off throughout the day. Uh, what can make this end? Can inflation coming down do it? Are earnings going to be the focus? Coming up, an update on the geopolitical risks. What's going to make this market turn around? Anything?
Tons. I mean, it's tons of volatility. I mean, it's just what we've been saying. Like, it's the market's behaving in a way where like Wall Street doesn't even look like it has any like feeling on it. And like it's just like what we've been talking about for now almost a month. On like almost a daily basis, we're seeing like large cap growth like switch, or like growth investments go one way and value investments go the other. It's like the market can't decide if it still wants to, you know, kind of bet on AI continuing to grow and carrying the market or not. Um, and that's really tough. Like for a retail investor, if institutions don't even have a handle on it, like what hope do you have? And like even this morning, we saw another like decent start for tech, and then it go the other way. So like we can't even on a day to day basis see for a full day these directions maintained. It just goes to show you that like you hit the nail on the head. Um, and it's just not doing, the market's just not behaving in a way where institutions are confident in what's going on.
Yeah, so one thing I definitely wanted to cover today, we're on pace to be the worst month since December 2022 for the Nasdaq, is stagflation. So much is made about inflation, but could stagflation be the true concern, where if earnings don't meet the expectations while inflation is staying stickier and we're seeing like unemployment rise? Is that the true like worst scenario that we could see developing, and we're in the early stages of right now?
Yeah, I mean, it's kind of like the setup for that is exactly what you would expect, right? Where it's basically like we have yet to see the impact of these um, rate increases really take stake, and so we're expecting kind of like bigger macroeconomic consequences, but that those macroeconomic consequences, might very well come on the heels of you know kind of earnings starting to catch up, but at the same time all of the impact that we've taken um, to essentially stimulate the economy, um, or all the actions that we could take to stimulate the economy, like lowering rates, we can't really do because inflation is still there. And it is looking, I mean, it's not looking like we're there yet. It's not like the last reading came in a little hot, but we're in very dangerous territory where if it gets a little hotter this month, we might start hearing rumblings of another rate raise, as opposed to a cut. Everyone was kind of expecting it to go that way, which would really set up a potentially very tough situation where, typically the market does well in election years. And so we'd be dealing with the market not doing well in an election year. And then, kind of an even bigger increase, a kind of an even bigger problem of, essentially, um, all of the economic stimulus, not also that we already engaged in terms of like stopping to raise rates, not effectively getting us down to where it would be the 2% level. So, you have a normal bull catalyst, that we're kind of seeing wear off, or it might just be a correction. But this week is going to be very important. And I think that's one of the things that we're going to talk about a little later, Stephen.
Yeah, so before you got here, Saul commented, are we still going down? Would it behoove me to just take my money out until things become more predictable? And, we were discussing some of the signals, how Prospero, the net option sentiment for SPY and QQQ still look really bearish. Um, but one of the questions I had for you today was, should investors be getting more interested in bonds as the yields are, high and or not, they're higher than and they've been climbing, and there's so much unpredictability right now. So kind of, hand in hand, are bonds looking interesting, and should anybody just pull money out just to be safe?
Well, maybe. I mean, I think what ends up happening is I never really like it's very hard for a retail investor to just like invest in a bond, right? And that's kind of like out of their comfort level. It's never a bad idea to have some of your portfolio being in like a bond ETF, right? Where you're getting that exposure, you're getting that stability, but you don't necessarily have to worry about buying and selling bonds yourself, which can be very complicated. So, it is one of those things where it might be a good time to do that. It might be a little late. We've suggested some specific stock investments. Like, it's never a bad time if you can start to learn the mechanisms properly to learn how to short as well. I don't necessarily think you just have to pull your money out. Like it's obviously worth, putting the time in and you have to really know, like you have to understand your costs. But I would say it's a very good idea to start learning how to short in terms of just for investment growth, personal growth, all that kind of stuff. So I absolutely think that it's a good idea for people to know, how to do that. So I think that's probably my biggest suggestion is, if you want to diversify into, things like, materials or, bond funds on the long side or something like dividend funds if you want just like lower risk investments. But if you're here and you're learning about single stock investments, it's not a bad idea to figure out how to start, like, even if it's just like a small amount of money, one or two shorts, figuring out how to get your feet wet a little bit there, especially if we're going into kind of an environment where we don't really, what makes bonds dangerous is like we could in 3 months see a cut. We could also, the way it's going in 3 months, see a raise. So it's like a rate raise. So like it's a very risky time to get your feet wet in like bonds, especially when you might have kind of already missed the boat there. But I think, as we're talking about, one of the things we did kind of in a unique way for this Sunday's newsletter is we really kind of dug in to, um, potential new longs and new shorts that are kind of like outside how we traditionally operate. So I think taking a look at that, for our paid readers, we also shared, and we often share some paid content here. Um, I'm happy to kind of share the screener that we put together with like, it has both good like long and short ideas that are kind of more value driven than we typically do. I'll drop that at this link. But yeah, there's a ton of different ways you can handle a more volatile market, down market. But yeah, you just kind of have to figure out what the best fit is.
So, after we were for so long discussing on the stream how we were in kind of a no man's land where we didn't know what the next move was. And now we've had this pullback that happened kind of quickly. Um, would you say that the market is in a healthy place, or is the move we're seeing unhealthy, or like looks like it's going to be leading to more risk, or are we still in a zone where we were up so much and a 6-7% market pullback is kind of typical? Maybe the speed this one's happened is too quick, but would you say the market is still healthy?
Um, I mean, we're seeing some very concerning signs, and I know we're going to talk about one of them in a little bit. But like, I would say some serious markers of non-health. Um, Granted, there's still like, and I think we were going to talk about this too. There's a big like, if AI still shows strength, I think we're going to quickly see all of this kind of given back, especially in large cap growth, and we kind of keep talking about that, right? Large cap growth has been carrying the market up, and it was almost entirely targeted on Friday. Like on Friday, a lot of the other sectors, like things look good. I should say like cap value things, they look good, and then again, we're in the same place where other than large cap growth, which is down today, and like everything else up on the day. So small cap growth, small cap value, mid cap growth, mid cap value, large cap value, they're all up. Large cap growth is the only thing that's down, right? So we've kind of seen that change in directions. And if earnings come in good for those stocks, that's going to like carry the market back up again. But there are absolutely concerning signs. People should be trading defensively. Like there's concerning signs in terms of the yield curve inversion that I think we're going to talk about at some point. And I think, yeah, that's definitely the time. Anytime you see SPY, I mean, we've never seen SPY net option sentiment and QQQ net option sentiment hit zero at the same time. QQQ, I'm not even sure I've ever seen it hit zero. I think maybe a couple times and it bounces right off of that. So them there at the same time says the institutions are very worried. Institutions are, you know, are heavily hedging. So I mean, I think that's something that you have to be conscientious of when you see that.
So you alluded to the kind of the yield curve inversion story that we're going to talk about, and so I was reading the newsletter last night, like I always do on Sundays, and when I got to this point, alarm bells just started ringing in my head. Like this is one of the most concerning pieces of information or data I think I've ever seen included in the newsletter. So we'll see. We'll dive in deep right here, but just to set it up for our viewers right now. So the yield curve has now been inverted for over 500 days, which is the fourth time in history it's happened. And the three other times were 1929, 1974, and 2008. And all three of those times have one thing in common, and that's that the market dropped over 50%. So when you hear something like that, it's hard not to feel a sense of panic as an investor. So are those feelings correct? We know that the past isn't a guarantee to repeat itself, but I mean, that type of like three times it's occurred and three times it's dropped 50%. It's pretty alarming in my mind.
Yeah, I mean, I will say one thing about it, um, and I'm just gonna pull it up so people can see because I do think it'll be helpful. Um, like we are seeing like obviously like one thing that I will say about you know, the last time, if we're just like kind of looking like, '08, there was a much bigger like macro. Even then, the market was doing pretty well, and there was kind of like a bubble that burst, and we don't kind of see a similar overvaluation bubble. So I think that's the good news, and I think you can look at kind of like the reason that this has happened. This one specifically is definitely, um, is definitely related to, I would say, a weird market where the economy is more being propped up by this AI boom. That's, I wouldn't say a bubble. That's a legitimate one. There might be a bit of overpricing, um, but yeah, I think that that's a big thing that we definitely need to start kind of figuring out what's happening with that.
And I think we will find out kind of after this earnings, right? Because I think, there's lots of different ways that it's going to go. And I know we're going to talk about this story more specifically, but, there's four outcomes here. It's like earnings go well and, the stocks still don't do, and the stocks don't do great, and that might say people think that AI is overpriced. I wouldn't say a bubble, but it is overpriced. Then there's it goes well and the market kind of takes a big jump again, as we've seen, which it says that we're in a weird position where in light of kind of some macro concerns, there's so much excitement over AI that seems to be carrying it in a direction where it might continue to kind of confound existing data patterns. And then obviously there's the two scenarios where it does well, it does poorly. And if it does poorly, if these big tech earnings come in poorly, and then the market still goes well, I think that's reinforcement that a lot of this value is kind of there, even with this little correction. Or it could go really negative, and it can say that okay, not only might these assets have gotten a little overvalued or overspeculated, but there's legitimate kind of concerns that these macro conditions are going to start to catch up with us. And that's why I think it's very tough for, when we say it's tough for even institutions to play this market, I think they're looking at this, they're looking at all the same things that we're talking about and basically saying, okay, I don't really know, I don't really know how to play this ourselves. We're going to do a lot of testing. So I think, and when we say testing, I think we see testing the market up and down. Basically, the way that we're seeing it, we're basically, they're stress testing it and basically seeing where momentum is carrying and how that actually impacts the ultimate stock prices. So I think that we're going to find a lot more. We're going to find a lot more interesting data coming in, but I think that that's where everybody is. That they need to see the data before they kind of start making these determinations of what way to go.
Yeah, you speak about how the institutions will test levels, and for so long we saw kind of every dip being bought, and now it seems like every rally is being sold. So it's a real change in environment. And we've been talking about the earnings, which they're going to be coming in heavily this week and in the following weeks. So are they going to become the number one thing that the market is looking at? I feel like what's made kind of the last couple of weeks so difficult is that there's a lot of different news and events that the market is kind of trying to piece together. Maybe it'll help investors if it becomes solely focused on earnings, and it could be a little bit more easy to make moves based off that. How do you feel about that?
Well, unfortunately, I think we might just see this all still playing out. Even looking at Nvidia and SMCI today, that anyone wants to look at the chart. We're not even seeing these kind of stress tests happen over full days or even half days. Now, if you're even looking at it this morning, SMCI I think was up to 2%. It's been down as much as 5%, all in one morning, all in 2 hours within opening. And that's after being down 25%. So what we're talking about here and we're seeing in the themes, we're seeing play out, right? We see people say oh, maybe SMCI was hit too hard, it goes up. And then we kind of have the bears coming in and maybe seeing that no, there's more room for the market to go down. And it's just a slugfest out there. And I think basically we're talking about, I think people often view hedge funds as a monolith or institutions, but there's clearly institutions right now that are thinking that, after Friday, there's opportunity to buy the dip. And there's institutions right now that are betting that this whole thing is going to go down more. So I think that's, the really tough thing, where it's if institutions amongst themselves aren't really all that decisive, it's very hard for a retail investor to get a grip. And you're going to be seeing a lot of confusing signals in the market, which is why that's why our approach was to take it very defensively.
And one of the stocks we wanted to talk about, because they have earnings tomorrow, and we got a question on Twitter from D about why is Tesla trash. But is Tesla. They have earnings tomorrow. They've been probably the hardest hit big cap stock in the past, probably the year to date. There was another news story about, a price war going on with them and Li Auto in China, and they were having to drop prices on their EVs. But with Tesla having been hit so hard, are expectations low enough that even if they just meet them, or if they're not as bad as feared, that they can survive the earnings better than a stock that's had, I don't know, say like Meta, that's still way higher and has rallied more and is a stronger stock year to
Yeah.
date?
I mean, we can start right away with like, why is Tesla trash? We can just get right into that. And I mean, I think Tesla is struggling because, sales are down. And I think some people are confused by this, and you might be seeing confusing things on the internet where everyone is kind of like the Tesla bulls are really trying to like kind of whitewash over that. But sales being down are a big deal, right? They're a growth company, they're a high growth company. And when you see like any break to that, like if Nvidia reported similarly disappointing like sales results, it would be down a ton too. Then like, and I make that comparison because then you add like the Elon Musk issue to it. And like, this isn't me. One of their largest shareholders says Elon Musk is hurting like their sales. And there's started to be surveys on people that have bought Teslas before that say they wouldn't buy again, or that, people that are saying that Elon Musk is becoming a factor in their sales decision. Right. And you see them lowering prices. They're all this cutting jobs. And we made this comparison like a few weeks ago. But I think it's important for people to know that when institutions look at investing in something, it's important for there to be a cohesive story there, right? And Tesla is trying to they're trying to say that everything's okay, but they're slashing prices. They just slashed like full self-driving. They're cutting workforce. That's actually saying it's not okay. And there are concerns for their business. So, and then there's the compensation package, and that basically looming, and that kind of is a lose-lose for Tesla shareholders, to be honest. If Musk kind of forces through this new compensation package, then he's kind of successfully shown that he can just do whatever he wants. And even if court strikes something down, he's going to kind of like force the issue and like, move the company or whatever. And Wall Street doesn't really like rogue CEOs that even are trying to like defy courts. That's a risk factor, right? If he loses, that's probably the bigger problem, where people might be worried that he's going to take tech elsewhere, as he's warned. So like the AI tech, the Tesla bot, or just their general AI things, like I used to say that was a bet as part of what I liked about Tesla last year when I liked it. That you had, kind of everything from, an energy play to an AI play to a vehicle play. And like a lot of that is based on Musk's innovation. And if he's kind of threatening to take that innovation away, he's like, that's a reason why people would value the stock differently. So I think that is a big, big thing to worry about for Tesla. And like, in terms of the question of like, yes, it could shield, like how much it's gotten beat up could shield from, even semi-disappointing results, right? Because if results are a little down, but still kind of better than the people that have started to bet against it are expecting, Tesla could actually go up with slightly disappointing results. And that's what we always say. It's important to know the difference between, Wall Street expectations and, actuals, because you never know where Wall Street is expecting, and where they're expecting is where they're going to react based on the results that they see. So I think that that's an important component where, it could be based on their expectations. There could be like a slightly below expectations quarter, or like below official Wall Street expectations, where it could actually go up because it's beat up so much because people actually expected it to be worse. And then it could be the other way, where like they could beat a little, but Wall Street was like kind of expecting that there's a tepid reaction to it, and they use that as an opportunity to short more. We're really in a very uncertain time in the market, which is why we're guiding people more towards, value versus growth, which is kind of a shift from how we've done things, because we're seeing enough concerning signs that we think it's time to look for value. And, Tesla isn't value right now. We've been talking about that. Like, we actually have seen like kind of a rare occurrence where the stock price is going down and the PE ratio for 2024 earnings is going up. And that is a terrible sign. You really don't ever want to invest in anything like that. So that's everything that's happening. Hopefully we answered your question, D.
And just to wrap up on this point, I saw an article talking about how Elon Musk might try to turn Tesla into an AI stock tomorrow in the news call. It was kind of just mentioning that they'll probably try to mention AI a lot. If you saw that happen, would you take that as like a Hail Mary, basically from the, you know, corporate of the company trying to like
I mean,
manufacture?
I think they're already kind of in Hail Mary mode, to be honest. Like, that workforce cut is a huge deal. Like, especially when it's one thing if like everyone's cutting workforce, but like a lot of companies have kind of stopped that, especially his contemporary company. So like that's a huge sign that he's concerned about their profits going forward. Um, so yeah, I think he's going to do whatever he can. But like I'm saying, like talking about AI, like that might not be the result that he wants, because like what we're talking about, like because it's a big concern, right? It's a big concern that he might start building AI outside of Tesla. Now there is a security, like once you kind of talk about something as like company IP, then it's kind of hard to start building it elsewhere. But you never know. He might just like he could always say like these are my ideas and they're not built yet or whatever. There's a lot of ways he can go. But yeah, I do expect them to do whatever they can to help their value, and mentioning AI right now is definitely a way to do that.
So this is a story that I really am interested on your perspective, and if you know any more details about if companies do this a lot, because it caught me by surprise. I believe you sent me this after our last Wednesday stream, and I thought we had to cover it. There was a story about how Amazon had a project called Project Curiosity, where they set up this company called Big River Services International, and they had them work with eBay, Walmart, Shopify, FedEx, any company that touched logistics or retail, basically, that was a big competitor. And they would have them work with these competitors, and they would gather data and information to use better at Amazon. And first of all, I feel like this might be illegal. I don't know. You could shed some light on that. And does this type of espionage activity within the big tech companies happen more than we would think?
Yeah, I mean, the legalities of it can be a little difficult. Like, and when I say that, I mean, they have really good lawyers. It really depends on what the representatives say, right? And like how they get the information. If you're just like, if you're saying that like, um, if you're basically lying, if you get asked any direct questions about like your affiliation, blah blah blah, like you're not allowed to lie. You're not allowed to mislead people as a corporation, especially like a public corporation. But a lot of that is like more to do with officers. If you can get in trouble as an officer of the company, like granted, it gets into some murky territory where like I'm sure they could, like Amazon corporate could say, "Oh, we had no idea they were doing this in their practices or whatever." And it's kind of hard to like. It depends on how careful they are. I mean, most of this stuff is just a bad look, um, because also, as we talk about what a lot of people don't know about legal actions is it's always like a cost associated with it too, right? Like, will Walmart sue them? Like, is that really worth it? Like, you might win some kind of, smaller judgment against Amazon for doing things like that, basically like corporate theft or whatever. but like proving the damages could be hard for Walmart, right? Or anyone. And you might end up spending more money on legal costs than you might not even win, right? And I think that's the tough thing. And like some of this stuff is just like brand new. Like there's a lot of stuff in terms of corporate espionage, in terms of like, obviously you had like things like Waymo and Uber and like things like that, where, software theft is, there's much more of a paved road for people doing that and poaching talent and things like that. There's not as much of, this kind of thing um, for these like huge companies with huge vendors. Like there's some corporate espionage stuff in the past, but again, a lot of that is like less about gathering data and more about just like straight up having people embedded in the other companies or what have you. So one of the things that is important, I'd say, in that is, and we talk about this all the time, it's just that like Amazon is, Amazon is Amazon, and like they're probably one of the more like, overvalued relative to their growth and 2024 PE of any company, but people feel comfortable betting on Amazon long term because they're managed in smart ways. Now, when you see something like that, like smart can get it could be pretty loaded in terms of what it actually means. But hey, it's like one of those things. I know you love the sports analogies, but everyone always used to like hate Michael Irvin, like a receiver for the Cowboys, because he would get away with like all of this offensive pass interference. And you'd see it and everybody would be like that. And I'm sure the refs would see it, but he would keep getting away with it. Right. So it's just like, and like ultimately I say this as a Giants fan who was very frustrated by watching Michael Irvin many times, but if you get away with it, you're kind of good. Like you're good at it. You know how to skirt the rules. And I think you could say like the same about Amazon, right? They function very well. They haven't really been, you look at places like, Meta and Google, and it seems like they're constantly getting sued by like countries or even Apple, and Amazon, and we talk with Microsoft all the time, like, they seem to just be better organizations at getting away with that kind of stuff. And like Amazon specifically is just excellent at expanding to new markets. And it's probably because they have very good plans. I mean, I know it's because they have very good plans for how they do it. So yeah, I think that is a super that's a super interesting like story. And the truth is, it's probably like an iceberg thing where they've got tons more things like that.
Yeah, so with the sports analogy, it kind of reminds me of like the Patriot way. And I guess what you're saying is like businesses like operate within the gray area. So if you can do that, you should. Um, oh, the other thing I wanted to say was that, you're talking about how Walmart probably won't sue them. Well, what if Walmart's doing the same thing and we just don't know about it? We haven't heard the story. Maybe that's another reason why they wouldn't sue them, because they're just all doing it to each other.
Yeah. I mean, I always think that it's like, Amazon's the one that's gotten caught. Even if Walmart is like doing it, they like, if they had a suit, they'd do it. They might stop their operation. So there was no retaliation. But yeah, it's just one of those where, you always see it and it's just interesting.
So, last story that we had on the docket today, I saw an article about Google possibly implementing a dividend because they're going to have so much free cash flow. It's actually crazy. $83 billion of free cash flow in 2024. We saw Meta implement this, and the stock has been one of the strongest in the entire markets. So, could Google follow up with the Meta playbook and introduce a dividend? Would that be good for their stock and expanding their investor base, maybe?
Yeah, I mean, we talk about this all the time, right? Where it's just like some of these tech companies, and we were just kind of talking about it. Like some of these tech companies, they've been sitting on this cash forever, and like Google, I would say even more than Meta, has had some really big R&D like fails. So like you're getting to this point where you're generating more and more cash. Like, and yeah, they've done buybacks, but it does get to a certain point where, like, especially I think in this market, thinking about becoming more of a value stock is smart. I mean, especially if you look at how that like Google and Meta are valued, their PEs are still so low relative to the other Magnificent Seven. Well, I mean, not some other ones, but certainly ones like Nvidia, Tesla. Like they're really like almost like 3 times better value than those companies. So yeah, like doubling down on that is a good thing for your stock, especially if there's economic worries. I think that Google absolutely will be doing that because you know it's just kind of the right thing for them to do with their money versus all these R&D splashes because they have so much too.
You mentioned the Magnificent Seven, but that's dead, George. It's now the Big Six.
Oh, that's official. Who else did it other than they call
Someone
it
did it.
like Seeking Alpha did the Magnificent Six. Who else is?
Someone did it this morning. I was watching the TV, and they were calling it the Big Six today. So I forget which coverage did it, but yeah, no more Magnificent Seven.
I mean,
Tesla's
we'll take
been
another live look at Tesla's 2024, but it's like it hasn't been looking good. Oh, it's down to 74.64, but it isn't a great, it's just as a value stock with these like earnings recastings, it just is not, and their forecast PE growth rates, they're expected to post a negative 24.33 in or a negative 24.33 full year 2024 right now in terms of their growth. So it's just that is you wouldn't see any of the other Magnificent Seven or Big Six sniff anything like that. Like we make fun of Apple for having a slightly down quarter, right? Or just a down quarter on their core businesses. That is highly concerning what's going on.
And we rag on, or the signals have looked so bad and everything surrounding Tesla for so long that I do want to introduce this thought experiment. So say this all plays out this year, and then in 2024 you see Tesla signals just looking amazing. Upsides 100, net option sentiments 100. You will follow the signals and you'll change your tune on Tesla, as long as the signals are there for it. Correct?
Yeah, I mean, I think for the most part, if they're for Tesla, we tend to want net option sentiment closer to 100. Short pressure is a concern. The full picture is important. But yeah, we're always open to the signals changing. But I mean, it's just one of those things that I don't really expect them to get to those levels as long as this Elon Musk concern is there.
I always like to kind of offer, because I feel like when you talk about a story from one side, you seem so locked in. Not you, but just people who talk on social media. So I think it's good to mention how it's kind of fluid. It's not exactly black and white.
Yeah, I mean, I'll keep watching the signals. It absolutely could. I mean, as we say, for historically, I've been a big fan of everything that Elon Musk is doing for a lot longer than I've been worried about it. So there's always that way of getting back to it, but it's just more than anything, it's it seems like he's in a fight with some people in politics and some of his shareholders and some of what he's doing on the vote in terms of courts, and he's just you just don't get very far picking as many fights as he is in commerce. And I think that's the bit, even I'd just be more bullish even if he just settled some of these wars. I was you know what, I'm dropping my compensation package issue for a while and we won't move the headquarters, and I'm gonna try to get I'm going to get some of the advertisers back that I literally gave a middle finger to. If you just calm down some of these wars, I would be very easily me, and I'm sure the signals, I think is what I'm saying, would turn around. But I'm the signals right now, and they're kind of downtrend, I would say is a reflection of all of these, the uncertainty around all these battles. And I think we should just make that part clear. it's not that I'm like shorting Tesla. I wouldn't short Tesla, especially at these prices, right? I just wouldn't go long either because there's too much uncertainty and volatility around all of these battles. So I'm sure a lot of shareholders are very open to like getting Tesla at a value if it looks like Elon Musk wants to like calm down all these battles, but he just doesn't seem like he wants to. Like he doesn't, if anything, it seems like he's scaling them up, not down.
And I know you have a hard out today, George, so I think that's a good place to wrap. Obviously, Tesla reports tomorrow, so we'll be talking about it our next stream Wednesday at 3 p.m. Hopefully, we'll see all of our viewers from today then. But if nothing else, I think we can wrap for today. And happy trading and investing, everyone. We'll be back normal time Wednesday, 3 p.m.
All right, see you. Bye.
Bye, George.